The number of open jobs in January was higher than anticipated at 7.7 million, signaling a steady labor market at the start of 2025. Although backwards looking, the JOLTS print provides a crucial baseline for the U.S. labor market before President Trump's policies began. A federal hiring freeze, widespread layoffs, and ever-changing tariff plans have since injected uncertainty into the market, reigniting recession fears and rattling corporate confidence. Joining me now, we've got Julia Pollak, who is the ZipRecruiter chief economist. Julia, great to have you back on the program here with us. With what we were just mentioning, how have you seen some of the hiring freezes, some of the spate of layoffs start to impact the hiring propensity and the types of positions that are being filled by companies?
Well, hiring is very stable and steady in the United States at the moment, in that healthcare is the one place where hiring is much faster than before the pandemic. In other industries, hiring has actually been held back for over a year now. Tech has seen job losses for 2 years. Professional and business services has seen job losses for a year and a half. And uncertainty has been the key word for over a year. It's been inflation and interest rate uncertainty. Now that continues to be the case, but policy uncertainty has been added to the mix.
And so how would you describe the health of the U.S. labor market more broadly right now?
I think that the surge in inflation and interest rates really knocked companies off kilter and injected a tremendous amount of anxiety. It's as though it's kind of pushed them to the edge of the cliff. And that is why any further uncertainty, any further shock is so much more dangerous than it might otherwise have been. There are many, many companies, especially small businesses, that rely on credit card financing, for example. And so their financing costs are so huge that they don't know how they can weather the next storm. Each storm has come on the tail of the previous one before companies have fully managed to recover. And that's why you see such small shares of businesses now saying that this is a good time to invest and grow.
One of the statistics that we're continuing to monitor, or that's the metrics that we're continuing to monitor, is the average weekly hours. So this work week falling to 34.1. What does that tell us?
Brad, that is actually the key figure in this past jobs report that looked otherwise pretty good on the surface with a low unemployment rate and high number of monthly job gains. The weekly hours number, though, is very concerning because it suggests that companies aren't yet cutting jobs, but they're cutting hours. When I first saw that print in the previous report, I thought it was a mistake. I thought it was a blip. I thought it was due to bad weather in January. But that we saw that number again for February is concerning. And here's what it's caused. It's resulted in a big increase in the share of workers who are part-time for economic reasons, which means they can't find a full-time job. That's now the highest number since 2019. It also increased the share of workers who are multiple job holders. That's now the largest since 2009. So workers are cobbling together multiple gigs because their primary jobs are just not giving them the hours they need.
What within that data, because there are so many different ways to look at that. It could be people who are taking on different side gigs, or it could be freelancers who are putting together different contracts and having multiple companies or clientele that they work with. What is the biggest shift that you're seeing right now, especially as we've seen some of the stats come out and say how millennials and Gen Z are looking to make sure that they can lean further into either creator economy or freelance economy to decide how they work versus the traditional historical element of corporate work?
So you're right. The multiple job holding is a very complex phenomenon. Part of it is driven by opportunity, by a desire for flexibility, by a hot job market where people can take on multiple jobs and earn, twice as much as they might otherwise do. But part of it is also need driven. And where it's taking place now, it does look like it's mostly a response to cutbacks in hours. If you look at earnings across the two groups, across multiple job holders and people with just one job, they're actually very, very similar. And so this is mostly people who are losing income in one job or can't find one job that makes enough, taking on two so that they can just earn as much as someone with one job, not break out and earn more. That said, of course, there are many young people who are very excited at the ability to monetize unused pockets of time while studying, even while in high school. who are getting into the creator economy. And thank goodness that we have those opportunities, especially in times like today when the hiring rate in primary, regular full-time jobs is so low.
Julia, always a pleasure to get some of your insights. Thanks so much for taking the time here with us today.
Thank you.